Just to briefly explain to you that the objective of the EBA is to protect the public interest by contributing to the short, medium, and long-term stability and effectiveness of the financial system for the Union economy, its citizens and businesses. The EBA was established by EU regulation in 2010. It came into being in 2011, 1st of January. And they took over existing tasks and the supervisory action that was being taken by the Committee of European Banking Supervisors. We took on also additional tasks such as consumer protection and financial innovation, which is exactly what I do at the EBA. We are an independent authority, but we are of course accountable to the EU Parliament and to the Council. The means by which we achieve our objectives are, of course, our tasks, and we have a task to improve the functioning of internal market, including in particular a sound, effective and consistent level of regulation and supervision. We also try to enhance and enforce consumer protection. And then what is really relevant for us here today is that we have a mandate to monitor new and existing financial innovation and adopt guidelines and recommendations with a view to promote the safety and soundness of markets and convergence of regulatory practices. And we also have a task to achieve a coordinated approach to the regulatory and supervisory treatment of these new innovations and provide, of course, advice to the European Parliament, the Council and the Commission in these fields. As to what TBA can and cannot do, where we are bound by our founding regulation. We have a founding regulation, of course. Some directives and regulations are listed in our founding regulation, and we also have other pieces of EU legislation that gives tasks to DBA. So these would be confining our work and our scope of action. You have a list there. You can go through it, and this list and this scope of action actually means that our work on innovation is focusing on payment services, payment accounts, electronic money, mortgages, personal loans, and deposits, because this is our scope of action. We have done some work on innovation, and we have an approach that we usually take on innovation. So, of course, we have an interest in ensuring that the market participants can have confidence in engaging with financial innovation. So when we monitor financial innovation, we always have this in mind, and we try to assess the benefits as well as the risks of innovation to determine which, if any, regulatory or supervisory action is necessary. So this is always our goal. In doing so, we need always to trade off the concerns we have about the risks, of course, against the interest in allowing the market participants to harness the potential benefits of financial innovation. So we never ignore the benefits of the innovation for the various stakeholders. We have a number of outputs so far on innovation. You may be aware of our EBA opinion on virtual currencies in 2014. This was an opinion we addressed to financial supervisory authorities and also to the EU legislators. So we advised national competent authorities to advise their financial institutions not to buy, hold, or sell virtual currencies at the time. And we also advised the European legislators to include some virtual currencies market participants, let's say, under the scope of the fourth AMLD of the Anti-Money Laundering Directive. This has not happened at the time, but it's happening now. Apparently, the Commission has proposed some modifications to the fourth MLD, and exactly to bring virtual currency exchangers and virtual currencies wallets into the scope of the fourth MLD. So the EBA opinion was heard by the legislators, which is good. And we actually have a second opinion on virtual currencies that was just published in August, again on the actual proposal to bring virtual currencies into the scope of AMLD. We have other outputs on crowdfunding. For instance, we have also an opinion addressed to the legislators, and we have discussion papers. And this is a means by which we try to gather data from the markets. We have two, the ones I list there. One on automation in financial advice. This was joint work we did with our two sister European supervisory authorities, ESMA and IOPA. This is cross-sectoral work that we did on the phenomenon that consumers are nowadays receiving financial advice through automated tools with very little or even no human interaction. So this was a topic we were investigating by developing our mandate to monitor financial innovation. And of course, we have the discussion paper that brings us here today, which is the discussion paper on innovative uses of data by financial institutions. So this is a topic that DBA has been investigating. that is the usage of consumer data that financial institutions already possess, and this was a very important topic for us. We wanted to make sure that the readers of our discussion paper understood that we learned that financial institutions already have a lot of data. So this is not only about financial institutions acquiring data from external sources, this is also about financial institutions using data they already possess for purposes that we call innovative, such as consumer profiling, offering personalized services, assessing creditworthiness, these kinds of utilizations. So the EBA issued a discussion paper in May 2016 for a 3-month period consultation. Discussion paper, the consultation ended in August, and the discussion paper characterizes the phenomenon, highlights the sources of consumer data that we have identified. These are consumers themselves. They give a lot of data to financial institutions, but also financial institutions access external data sources and databases, and the purposes for which the data is used by financial institutions. That is, again, rewards programs, cashback deals, advertisements, etc. The paper also outlines potential benefits for various stakeholders, such as improved quality of products and services for consumers or new sources of revenue for financial institutions. We also, of course, outline potential risks related to information asymmetries for consumers or to reputational risk for financial institutions. And the paper asks questions about the possible evolution of the market, taking into account, of course, the new entrants in the market, fintechs and big techs, and all the new entrants that use data and provide financial services, and also the regulatory landscape introduced, for example, by the GDPR or even the Payment Services Directive 2. And we are now assessing responses to the discussion paper, and we will use the feedback from respondents to decide which, if any, action is relevant and required at this stage, as I explained to you in the beginning.